Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we're going to be talking about the ATR scalping strategy. And this is a powerful method designed to help you capitalize on market volatility for quick profits. So stay tuned until the end of this video as I will break down exactly how to use this average true range indicator step by step and share tips to avoid common mistakes that could cost you your trading account. So let's get started. We start by understanding what the ATR means, and the ATR means the average true range, and this is a technical indicator that was designed to measure market volatility. It was developed by J. Wells. Now, it calculates the average price movement of an asset over a specific or a specified time period. Now, unlike other indicators that focus on price direction, the ATR strictly measures the degree of price fluctuations, making it a valuable tool for traders who need to understand market conditions without bias towards bullish or bearish trend. Now, there are some key features about this ATR indicator that you need to know about. The first feature is it's non-directional. The ATR does not indicate price direction, it only measures the volatility of price. The second key feature is its adaptability. Now, the ATR can be applied to any time frame, either your 4-hour time frame, your daily time frame, your weekly time frame, your 1-hour time frame. It can be applied to any time frame you choose. Now, the last key feature about our ATR indicator is it is dynamic. It's, it is dynamic volatility. Its dynamic volatility, high ATR value usually indicates an increase in the market volatility, while a low value suggests a quieter market condition. Now let's dive into a trading strategy that will help us capitalize on this ATR indicator. Now, the trading strategy, we first start by picking a currency pair you would like to trade on. I would always advise to stick to the major pairs such as your Euro USD, your JPP USD, and your AUD USD. These are the major forex pairs you can trade. You can also make use of any time frame. For fast trade ideas, you can make use of your 1 hour, you can make use of your 15 minutes, 1 minute, 5 minutes, as the case may be. If you are looking to get quick price movement, you just need to focus on the time frame with minutes shorter minutes. The second step is to set up your ATR indicator. Now, to set this indicator up, you need to add, first of all, you go to your indicator and you add your average true range. Then you would have to make sure they have a settings of, it has to have a default setting of length 14. For scalping, you can shorten it to 5 or 10. If you are a scalper, you can shorten this length to 5 or 10 to help you capture more recent volatility. Now, the ATR line is displayed. It displays the average price movement over a selected period. Now, these lines will show the average price movement over this 1 hour period. This is the selected movement in this 1 hour period. It will give you a clear picture of the market activity. This is typically what price, you can notice when price went to the upside and came back down, you can see the ATR did the same thing. So it moves with the market. Now, the third step is to identify your entry point. Now, the ATR helps you to confirm when the market is ready to move. when the market is ready to move, let's say we have a resistance at this area. This is a resistance at this area. We do not know when price will be ready to break this resistance. You can also use this area as a resistance. We don't know when price is ready to break this resistance. This is also known as breakout entry. You start by identifying the key support or resistance level. You wait for price to break above. Once price breaks above the resistance level or the support level with a strong momentum, and as you can see, price broke this resistance with a strong momentum with a bullish candle close. You will confirm that breakout it has exceeded at least 1.5 the current price. That means the ATR value before entering the direction of the breakout, you have to confirm that, like at this time in the market, this was the value before it broke out. This was 0.0035. Then when price broke out of that area, you can see it broke out with a momentum, and you can see it is higher than this 3.35. Now it is 39. That means there was an increase. So at this moment, you can decide to enter your trade after the breakout. Sometimes, not always, but it is always good to wait for a pullback entry. You have to identify the prevailing short-term trend, whether it's uptrend or downtrend. And as you can see in the market, if you zoom out, you can see the market is trending to the upside, which is making series of, it is respecting this trend line in this area. So we can say that we are expecting price to break out from the up direction. It's usually advisable to wait for a retest, but in case it does not happen, you can always enter your trade after you see a momentum candle close above your resistance or support area. Now this will be a good place to enter your trade. Now where would you put your stop loss? Your stop loss placement, you place your stop loss, which is the step 4. You place your stop loss below your entry in an uptrend. In an uptrend, you place your stop loss below the entry. Then in a downtrend, you place it above your entry point. This accounts for normal market fluctuation while protecting against excessive losses. So you can just place your stop loss just below the resistance zone. You can give it enough room for breathing space. You can decide to put it below the most recent swing low, as the case may be. That means it will be around this area. Or you can still make use of your ATR. You can set your stop loss to your ATR value. You just wherever, let's assume this is the area where price broke out from. You want to put your stop loss at this region. Your stop loss can be kept at this region below this swing low at this place. That's 7.6 pips. You just multiply your stop loss you got from this area times 1.5. That means this value times 1.5. Or you can make use of the ATR value at that area. This is the value at the area. This is 0.0396. You can multiply it times 1.5 to get your stop loss value, and you can use that for your stop loss. Same with your take profit. You can always set your take profit to 1:2, 1:3, fixed risk to reward. Or you can make use of multiplying you can multiply 1.5 to your ATR value, where you expect price to be projected to through your ATR indicator. These are ways you can use your ATR to set your stop loss and take profits. Alternatively, you can also use trailing stops based on the ATR to secure profit as price moves in your favor. Now, the 5th step is to always remember to manage your trades. Once you are in a trade, for active management, this is very crucial. You can always use a trailing stop loss based on your ATR to lock in profits as trade progresses. You can also scale out of position at predetermined levels. For example, you can take partial profits at the next swing high or 1 times your ATR value and let the remainder run. You can always take partials. You can scale out of position. That's another way. Now, the last way we can manage our trade is by exiting immediately if market condition changes or if price action invalidates your setup. So once you see there is an invalidation on your setup, you can always exit your trade manually. Now let's look for a bearish example. Now in this example, this would be our support region. This is our support region and we expect price to break through this area. Now when price broke through the low, price broke through, traded for a while and came back to retest. This was where I was saying you can always wait for a retest. When price broke below this support region, you can see the ATR value at that time started trending to the downside. As you can see it here, this indicates that yes, it supports the volatility of price to the downside. So you can always enter when price comes to a test. You put your stop loss above your last swing low and you aim for your 1:2 or 1:3 as the case may be, or you can aim for your 1 times 5, your 1.5 times your ATR value for your take profit or your stop loss. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. And if you found this video helpful, do not forget to like, share and subscribe. Thanks for watching and I will see you in the next video.